This content is for educational and entertainment purposes only. It does not constitute investment advice. I want to show you a trade I took, why I entered it, why it made sense at the time, and why it completely fell apart. You see, I went long on this green candle because there was a ton of confirmation for this trade, or so I thought. Volume for this candlestick was extremely high and was even 4 times greater than the average volume. And on this candle, price even broke the local high. Now, with all these confirmations put together, these are characteristics of a textbook breakout. And Bitcoin was creeping back towards all-time highs. And yeah, I didn't want to miss this breakout, so I took the long right at the close of this candle. But watch what happens next. Price reversed hard and stopped me out almost right away. And the worst part, the candle that crushed my trade had even more volume than the one that got me in. At first, I thought I just misread the setup. Maybe the breakout wasn't real. Maybe I was too early, but something kept bugging me. That volume spike I entered on, it looked massive and felt convincing. But if it was truly high volume, why did the next candles completely erase it and on even more volume? So I started scanning through recent candles, and then that's when it hit me. You see, I thought this breakout candle had high volume, but when I zoomed out, nope, I was way off. This wasn't high volume, this was high volume. But then I zoomed out again, and I was wrong again, because this wasn't actually high volume. This is what real volume looks like. And it turns out what I thought was meaningful volume on that breakout wasn't even close. And I realized that I just kept falling for the same trap over and over, thinking that I understood volume just by eyeballing it. Now, all of this might seem like a one-time mistake, but it's not, because here's what we're told as traders. Volume confirms price. High volume means strong conviction. Always watch the volume. But the truth is, just eyeballing volume bars, it's not helpful. Not really, because there's no scale, no context, and no frame of reference. What looks like a big spike can totally mislead you, especially when you're zoomed in, especially when the recent volume was quiet, and especially when you're reacting to what feels like activity instead of measuring it. The result of all this, you make decisions based on raw volume bars that look important, but in the grand scheme of the market, they aren't. So what would have actually helped me here? Not a bigger volume bar, but a way to measure how significant that VAR was in context. What I really needed was a way to rank each candle's volume, not in isolation, but relative to the recent market. A simple way to look at any candle and know what's this low volume, average volume, or top 10% volume. Because just eyeballing volume bars and figuring out on the spot if volume is high or low just wasn't cutting it anymore. And I became obsessed with this failed trade and the price sequence contained within it. And I spent hours calculating the ranking system for each candlestick manually. I went candle by candle for this entire price sequence, ranking the volume from weakest to strongest just to get a clearer picture and to see if I was actually onto something. And when I finished, I was shocked. The candle I entered on was only a 7 out of 10. Not low, but definitely not the kind of volume I thought it was in the moment. But what surprised me even more was how much clarity this ranking system actually gave me. Seeing each candle in context, it instantly changed the way I read this price sequence. And after going through that whole process manually, I realized this can't stay manual. It was too helpful, too eye-opening. This process had to be automated and it had to be shared because I know I'm not the only one who's been misled by volume bars. So we built it, a tool designed to give retail traders a clear, right view of volume, every single candle, no guesswork. We call it Volume Count IQ. To be fully transparent, Volume Count IQ is a TradingView indicator that can be accessed after registering with our affiliate partner exchange. It costs nothing, and that unlocks access to the indicator. It's an affiliate partnership. which means we may earn a commission if you trade, but there's no extra cost to you, and no trading is required to get the tool. Now, you're probably wondering, what do all of these numbers actually mean? Volume Count IQ ranks the volume of each candle
on a scale of 1 to 10.
using a percentile-based system. All this means is that a score of 1 means the lowest volume in the recent range. A 5 represents average volume, and a 10, that's some of the highest volume we've seen in the entire look-back window. Now, all of this sounds great in theory, but when my developer first sent me this tool, I'll be honest, I had no idea how to actually use it to trade. I didn't have a rule book, so I started doing what I always do. I tested, I watched, experimented, and I made mistakes. But I started noticing patterns. Now, before I share what I've learned, just a quick heads up, this is not financial advice. It's just what I personally discovered through my own testing and have found helpful for my own trading. Everyone trades differently, and your results may vary, and there are no guarantees that what I'm sharing will work for you. But here are 3 ways that I found this tool helped me better understand what volume is actually telling me. Let's start with strategy number 1, which is spotting fake breakouts. If a breakout candle prints, but it only has a volume rank of 4, 5, or even 6, that's a huge red flag. Wheel breakouts tend to happen on rank 8s, 9s, and even 10s. So anything below a score of 8, 9, or 10 when a T support or resistance level is broken shows a lack of conviction in the move and might just be market noise. And when these real breakouts actually happen, I like to enter my trade at the close of the candle that triggers the breakout. For exits, I'd personally close the trade once the volume score drops to a 7 or lower. That's usually my signal that momentum is fading. As for stop losses, I keep it simple. For shorts, I exit if price moves above the high of the breakout candle, and for longs, I exit if price breaks beneath the low of that candle. And for this hypothetical trade, you can see I had a risk-reward ratio of 1.17 by using Volume Count IQ to help me find a strong breakout. Now, I want to show you strategy number 2 I picked up while using Volume Count IQ, and that is identifying real rejections. This one's actually pretty simple, but it really helped me understand how reversals actually work. You see, when price reverses hard, check the volume rank. If that reversal candle scores a 9 or 10, it might not just be a random pullback. It's a strong rejection, backed by real conviction, especially if the candles leading up to it had volume scores of 6 or lower. This contrast makes the reversal even more meaningful. Now, the way I've personally been trading this strategy is by entering at the close of the candle where the high score reversal happened, and then setting my stop loss at the high of that candle for shorts, and for longs, setting my stop loss at the low of the reversal candle. From there, I calculate a 1-to-1 reward risk ratio, and that's where I set my personal target. And we can see for this example trade here that I took, my reversal trade used a risk reward ratio of 1-to-1. And the most important thing I learned with using Volume Count IQ is that once we start seeing volume as relative, not absolute, we stop guessing and start understanding. And this personally changed the way I trade. And if you give it a shot, it might just change the way you see the market too. If you found this video helpful, or you're looking forward to trying out Volume Count IQ, hit like, drop a comment, and make sure to subscribe. We've got more deep dives like this coming soon. And you can follow us on TradingView and Twitter to stay updated with the latest indicators, ideas, and breakdowns. And if you want to trade alongside a ton of vibrant, active traders, join our Discord. We'd love to have you. And I can't wait to see you in the next video.